What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Friday, October 29th. As always, guys, nothing that is discussed on the channel is financial advice. This is simply the channel is simply providing financial education, trying to teach people how you don't have to slave in that 9 to 5. You can simply hustle 24/7 in the market and be just as profitable or accomplish all your goals and ambitions you ever thought possible. Someone asked me the other day, why do I hustle? Or why do I choose to do this? Well, this is the answer. For those of you that are curious, I have two little boys that are literally my world. They look up to me for everything. I try to be the best example I can. And I try to teach them that you never quit, you never give up. Especially when you want something or you desire something, you got to put in the work. Most of the time when I'm recording a video, they're either somewhere here around me. The oldest one, he likes to watch. He likes to make his own YouTube videos, so hopefully one day maybe you'll hear his voice on YouTube as well. But again, I just wanted to touch base on that because again, a couple people have asked me. I don't ignore people's questions. Again, I'm nothing but positive vibes and good karma for everybody. All I want is people to be more profitable and be more knowledgeable. So we're going to get into it. As always, today's ticker is going to be ATR, or otherwise known as ATER. A lot of you guys may know this company. This company did have a pretty popular run last year, starting in December, going essentially from the 6s all the way up to the upper 40s before falling back down to earth, crash landing at the 3s before shooting back up to the 18s. It's had a pretty wild ride. There is a significant short position on this play. This would be considered a meme stock. How do I know that? As you guys know, I use Lucid Tracking to track meme plays. Specifically, this one is ranked number 5, directly below Tesla, Smile Direct Club, GameStop, and AMC ranked number 1. So ranked number 5, it's pretty up there. I've done a couple other videos, for example, Prague, right? I've done a Smile Direct. I've done a bunch of AMC. I haven't done a Lucid yet. I haven't done a GoGo. Haven't done a GM. But I mean, if you guys are interested in those plays, just let me know, as always, and I'll get to work. That's what I do. I like to do breakdowns. I like to do analysis. I like to give people understanding of plays they choose to invest in, right? But let's get back into ATER, excuse me. So what is ATER? It's a technology-enabled consumer products company. The company brands include, and then it goes on to list the companies you can see here. Its products categories include home and kitchen appliances, kitchenware, environmental appliances, beauty-related products, and consumer electronics. The company was founded, and then the founder's name, Mr. Zion, in 2014, headquartered in New York, New York. So one of the things I always like to, point out when I'm investing in a meme play, there is an indicator that I like to use specifically that I don't see a lot of people reference, but it is a good one to know and a good one to use. It's going to be this one down here. It's called ADL, right? So what is ADL? Well, if you want to know the exact definition of ADL, this specifically is called the A and D line oscillator. It actually has a better meaning. Accumulation and distribution line, right? Who created it, right? What it kind of does is this, right? The A and D line can be used to gauge for general flow of money. An A and D line's move higher is a signal that buying pressure is starting to prevail. On the flip side, an A and D line downward move signals increased selling pressure in the beginning to gain foothold. You can use the A and D line to confirm the strength and possibility of longevity of a current move, right? So essentially, what does this mean? So what you want to see, if a ticker starts to run up, you want to see the line also run up, right? That gives you a bullish signal that the money flow is flowing in, supporting that run up. What you don't want to see when a stock starts to run down, that the line is trending down as well, because that's telling you the money flow is leaving the play, right? So why is that important in a meme play? Well, in a meme play, you want to see essentially when you see these peaks and valleys, as this is a potential short squeeze play, you see this run up, it's essentially had a little bit of a run up, right? Nothing major, right? If you zoom in closer, obviously, you can see that was actually a major swing to the upside, right? You see this move to the downside where it went essentially from February all the way through, what is this? August 23rd. Well, for the most part, it was a downtrend, right? Little peaks and valleys here and there, but for the most part, it was level set, right? The trend is your friend, as I always say, or I always like to tell people. Trend lines are your friends. You just got to find them. So we can draw a trend line right here, and you can see that trend is relatively low. It's nothing major. It's not like a vertical 45, right? It's more, I don't know. I'm not a I'm not a carpenter to measure or be able to interpret lines, but I would say that's a decent slope to the downside. So money flow, yeah, was leaving the play, but not to significant points, as this move did make from the 40s down to the 3s. However, when you flip it on the upside, once it did reach its floor here in the 3s, now look at the trend going up. You see the money flow is going up. Well, since peaking here in the 19, what is that? The body ended at 1822, so I'm going to call it 1822. We can draw another trend line actually here, because again, the trend is your friend. And we'll hit that line right there, and you can see we have a downtrend right here, right? It's being pretty well respected, but look at the line. It's essentially leveled out, right? We can zoom in further to see that the money isn't leaving. It's holding firm, even though we're in a downtrend. The line isn't necessarily going straight down. It's still holding level, which tells you people aren't selling. People are holding this play. That's a positive sign anytime you're invested in a short squeeze play. So what did I like about ATER? Specifically, I went digging through their website, right? So they have a couple different things, right? They acquire companies, they partner with companies, they brand companies, but the most important or bullish thing that I found was AIME, right? What is AIME? So meet AIME, our commerce operating system. AIME is artificial intelligence marketplace e-commerce engine. The biggest takeaway that you've seen from some of the plays I like to talk about, artificial intelligence. Artificial intelligence is going to be very big in the future. Some companies like UPST have already taken off. Other companies like Hippo are running slower, right? They take time, right? Because people don't necessarily trust the AI, right? Well, this one with e-commerce, think of it like a artificial intelligence of Amazon. Only they literally are partnering with companies who already build brands. As you can see, they can help you build it. They acquire, or they just partner, right? The choice is yours. They're willing to do whatever. But it is an important takeaway that this is an artificial intelligence play. That makes me even more bullish. I'm not sure why that people are so short on this play. I see nothing but upside potential. But again, I'm not a professional. I'm just a guy on YouTube talking about a play or a stock that I like, right? But if you go down through here, they have a couple different presentations, right? How it maximizes your efficiency, right? All the good things that they want to highlight about their software and the potentials they have on branding with you, building with you, or acquiring a partnership with you, right? Because again, AIME automates everything, right? It predicts price targets. It gives you sales forecast. It can give you a lot of different data, and they go to talk about it here in their website, right? I'm not going to get into super fine details, but the point is they have something most don't. Name another company that has an artificial intelligence that can analyze a person's company or business, give them a sales forecast and predictions and models of what they should do or what they could brand to get their name out there more. Go ahead. I'll wait. Because you won't find it. It's one of a kind. To me, this is one of a kind. I've never heard of anything like this. Maybe I'm a little naive. Maybe. I mean, who knows, right? Again, I'm just a guy on YouTube talking about a play. But to me, that is something that is super bullish, specifically of what I found on here. They do have an investor section. They have a presentation on here. It didn't really show much information. As we saw, recently they missed on earnings in the last reporting in August. Prior to that, they also missed on earnings in May. Prior to that, they also missed in earnings in March. And then the green earnings was the very first earnings they had. They were estimated to do minus 28 cents per share. They only missed by 5 cents per share, so that's an upside of 23 cents. And then for revenue, they also beat with 1.134 million. Since then, though, the earnings have gone red. Now, it is predicted that for this earnings, they are going to beat. I actually did find a couple of news articles, so we can go see those now. Under Marketbeat, obviously it talks about the short squeeze. Brokerage anticipates Outterrain will post quarterly sales of 64.23 million. Well, at 64.23 million, if we go back to the last one, they reported 68.18, right? They were estimated to be at 94.712. If we're looking at this one, I don't think, yeah, 63.039, right? So at 64.23, and Zex is a pretty reliable source. That would be a beat. So that would be a beat by 1 million. If we can get a beat on the estimated earnings per share, that would be all green, which would even give it more momentum, to be honest, in this play specifically, because I know a lot of people do watch this play. If you go to Google Trends and Google this ticker, it is up there in the list. As you saw from Lucid Tracking, it is ranked number 5, which tells you that a lot of people are buying this play specifically. When you go and check the short interest, as I always like to show you guys, it does show 66 million. If you go on Reddit, you see a lot of different people throwing a lot of different numbers out there. I was not able to verify some of those numbers that are out there, but it is stated that this play does have a significantly high short interest position. So I don't want to provide misinformation to anybody. Again, I'm only trying to provide as much information as possible for you to make a good educated decision for yourself. But we always see that down here, we have shit in a box, their butt buddy that are always present, both in this company and Wolverine Trading. So the notorious short sellers are always present, right? Institutional ownership, you will be happy to know. It does have significant institutional ownership. Specifically, if we go to shares held, you see the BlackRock, Vanguard are both holding major stakes. No Rentec on this one specifically, no ARK. But again, as I did mention, or as I always mention, seeing BlackRock and Vanguard are two pretty positive signs. When you go to some analyst targets on Marketbeat, they have a buy rating with an analyst price target high of, 50, average of 20, low of 10. Now, please remember, this ticker is nowhere near those right now. It's sitting at $6, but in its historical, it's been close to those targets. So it's something totally feasible for this company, right? You put some strong earnings, you get some FOMO in there, you get some really bullish sentiment and momentum. You see people that are holding this stock, and you could potentially have your hands full with a short squeeze and a FOMO purchase rally. And that could be really, really bullish for the stock, which could bring it to these potential highs. At these highs, you're talking at least almost a 10x on your money. If that were to be the case. Again, I said almost, and that's a prediction based on this model. That's not my prediction. I don't give targets. I don't like to speculate to that extreme because, again, people do take offense to that, or sometimes people can take that as misleading or make bad decisions because they choose to listen to someone on YouTube. Please always do your own due diligence. It is very important that you follow your own guidance. Again, this is just compiling information for you to have. If we go to Nasdaq, you see that they do have a strong buy. They do have two firms, Oppenheimer and Roth Capital, that are reviewing it, and they are also giving some targets with a high of 14, a low of 12, or excuse me, a low of 10 and a mid of 12. Well, at 6, the mid, that's a double up. 14 is a little bit past the double up, and on the low, you're still looking at potential upside on all avenues. So buying in at 6, there's nothing but upward potential here, right? Whether it's $4 a share, $6 a share, or essentially $8 a share gaining, right, from the lower models. But if you go by the higher, that's obviously way, way, way higher potential. In either case, it sets the precedent for a bullish trend or a bullish run, right, in the future, hopefully, right? Again, no one can predict the future, but again, that's what we see. To give you guys a recap, finally, as I always like to do, of the flow, I did go through here. I do have $25,000 premium through the flow, right? First, I like to make sure we exclude deep in the money, so we get an estimate based on just speculation. As you see, it is bullish for the November 19th, which is coming up. That's the monthly for next month at the $10 strike. So that's first and foremost. If we go back out here, take out the exclude deep in the money and go only out of the money to see speculation. We go back into the charts. What do we see? Once again, it is bullish for the November 19th. We are at the 10, the 1250, the 15, and essentially the 17, which is giving you a pretty good range. Now, you go back out here, take that off, right? Go to opening trades, opening position trades. Go back in here. Again, you see that it is still bullish on all accounts through all strikes, peaking probably the most at 2250, which interested me the most. That was pretty interesting, to be honest. And then lastly, if you go in here, I think it was 30,000. So for the bigger whales, you can go in here. Once again, you see that it is bullish for the November 19th. And once again, you see that that 10 is predominant through all price values, right? Including lower price values. So the flow is telling you it's bullish. The chart is telling you it's bullish. The news articles are telling you it's bullish. It's ranked really high on Lucid Tracking, and price predictions are very high on this specific play. So that to me is a pretty bullish case for a play. If any of you are interested in, now you at least have a little bit more information and you have a little bit more fundamentals to base their decision on. As for me, if I do establish a position, I will always post it on Twitter or IG for those of you that are interested. Or you can also watch or view the stockhustle.net. That is my personal website with all of my social medias connected to it, including my YouTube and my most recent videos. For those that want to keep up, you are more than welcome to. If anybody has any questions, please leave it down in the comments below. If you appreciate the information in the video, give me a like or subscribe to the channel as always, and I'll catch you guys in the next one.